All right, guys. Going to get started here in just a couple minutes. Just going to go ahead and get everything set up here. Let's see. All right. I'm just getting the chat and everything all good to go. Re-announcing everything to everybody. All right, let's get it. Got about 2 minutes before we start here. Those of you that are in here, I really appreciate it if you can go on Twitter and like and retweet the link to the stream. Helps me out a lot. I really appreciate it. Gonna start in just a second here. All right, and during the stream, definitely don't be shy. Use up the chat and everything. I love getting everyone's thoughts and, like any chart requests and stuff that you guys have, feedback from you guys, just saying hi in general. I really appreciate that. All of the engagement helps, and I love talking to you guys too, of course. That's why we do this. All right, there we go. Just real quickly in the chat, if you guys can just let me know that all the audio and video is coming through, everything looks correct, and there's no lag between my voice and the video and everything. Just do a little stream check real quick. I should have fixed all of the issues that I was having from the previous stream, but it's always good to just check and make sure before I really start rolling in case I have to change anything up real quickly. But everything should be good. Everything should be crystal clear. Audio should be crystal clear. Everything should be awesome. Oh, Chris is in here. What's up, Chris? Good to see you, buddy. So those of you guys that have been in here before, Ancient Aliens in here, what's up, guys? Pretty much the normal crew so far. These streams are probably going to end up getting more popular very quickly. I do have some big announcements that I'm going to make at the beginning of the stream while more people are coming in here. So just bear with me for a minute. You guys that have been in here before, you guys know how I roll. It's Friday night. Crack a beer or grab a whiskey. Come relax. We're going to talk markets. We're going to talk charts. There's a lot of things that are going to be going down next week that I'm really excited to talk about. Lots of earnings and stuff that are coming up next week, along with a lot of just legacy numbers in general. There's a couple PMI reports that are coming out next week, things like that. We're going to talk about all of that stuff and then dive into the actual analysis. We're, of course, going to go over liquidity, brought to you by highblockcapital.com. Again, all of the links to all of those things and more are down in the description below. Make sure that you guys are smashing that like and subscribe button. If you guys are new here, I do a stream every single week, sometimes twice a week, but usually once a week on Fridays. And then I do, of course, those short analysis videos, tutorials and stuff like that. I have a new tutorial coming out next week. That's actually going to be on price structure. So I told you guys last week, I'm going to be redoing a lot of my tutorials and educational content, really focusing and just laser focused on my own products and, my YouTube and stuff like that. Laser focused on it. I'm going to be redoing a lot of those tutorials. So, definitely stick around, make sure that you're a part of the channel and stuff. There's some other things that you guys can do now too. If you guys want to support the channel, the super chats and super likes or whatever, those should be enabled. If they're not, they will be soon. So that always helps support the channel and stuff. Obviously liking, retweeting, all of that good stuff. And I'm also releasing, I don't know if it's live right now, but there should be a way for people that are that want more education and or private streams and stuff like that and or one-on-one education. I made different tier membership packages on the YouTube. So if that's something that you guys are interested in for more knowledge, you guys are hungry for the education or one-on-one, stuff like that, one-on-one training with me, make sure that you guys check that out. All the information should be on the stream and on the YouTube, do all the things. But anyway, that's my little intro. So just kind of an overview of how the stream is going to go. On to big announcements before we start taking a look at the charts. So if you guys know, maybe some of you don't know, I've been partnered with Astrobit for a very, very long time. I've been working with Nick, the CEO of Astrobit, since Astrobit was before it was even public. I was working with him through this, I think 2 years ago. I was the first strategist onboarded there. Really, really awesome stuff. And they are going to be releasing to strategists like me. I think me and maybe a couple others are going to be the first ones that we're going to be able to run through our strategies through the AI optimizer. So what that's going to do is basically allow me to take my Venom algorithm, which I just gutted, redid all the code and everything, run it through AI so that it can be used and get the optimum settings for different pairings and different time frames. So this is really big, guys. I don't think you guys actually understand exactly how big this is. I'm going to be doing an absolutely massive marketing push very soon. There's also going to be beta tests so that you guys can check out, the Venom algo and stuff. There's going to be limited spots available for that. Okay. So I'm telling you now, if that's something that you're even remotely interested in, make sure that you make an account over at astrobit.io. Again, links, all of that good stuff down in the description at Astrobit Trading. On Twitter and all of that stuff. Make sure that you get involved. Make sure that you subscribe and follow the at Venom Algo on Twitter as well. All of this information is going to be out there and it's really, really awesome. I'm super excited for this. This is probably one of the biggest product launches that I think I've ever done. I don't even have my website up yet. And that's something that I have to finish this weekend. This is really big. I'm extremely excited for the results. I'll just kind of go over those real quick. Let me switch to my screen here. Where is my, there I am. You guys should be able to see me in the little left-hand corner of the screen over here. I actually, you know what? Let me hide my screen real quick because I don't want to dox any settings. So let me bring up the chart first and make sure that it's okay to show you, because otherwise we're going to have issues. That should be good like that. Okay, so let's go back to my screen. Boom, there we go. Okay, so this is the new redesigned redone algo. So as of right now, I think this is a 6-month back test. Let me double check that real quick. It should be, shit, I don't want to go into the settings. Hold on. Hold on a second. Make sure the inputs are right. 2022 6/1, 6, 7, 8, 9, 10. So this is from June. I mean, close enough. It's like 8 months, whatever. That's fine. So this is 8 months. That's about 30 trades. That's about, I don't know, maybe a trade a week or so, a trade a week and a half. 70% profitability, almost a 6-to-1 profit factor, extremely low drawdown. That's probably the biggest stat that I'm most excited for, is the incredibly low drawdown. This is a massive difference between this and my previous strategy that's still out right now. I think the max drawdown on that was something like 22%. So this is an absolutely massive improvement. I've been working day and night. I can't tell you how many sleepless nights that I have had. Like, everybody makes a joke about, oh yeah, the crypto traders, they wake up in the morning and their wife asks them, have you slept yet? I can't tell you how many of those nights that I've actually had working on this. I've poured blood, sweat, and tears into this over the last 3 months. I'm super excited to be able to offer a free beta test, not only to Astrobit members, but after that, I'm going to open that up to the public as well. All of that's going to be in the works. I have to hash out all of the details with the people that I'm going to be working with marketing and Astrobit themselves on that. But you guys will get more details on that, as the time comes. But let's check out the performance summary real quick. And what I want you guys to see is this Sharpe ratio and the Sortino ratio down here. These are very high, considering it's 8 months. But I mean, this is just, I can't believe how good I was able to get the settings, and props to the Astrobit team for all of the time and dedication that I've spent with them redoing all of this, gutting code and all of that. It has been a hell of a process. This has been going on since before the holidays, before the new year. So this has been a lot of work in the making. And I'm just really excited to get all of this out to you guys. But enough about that. Shameless plug and everything. I know, again, if you guys are interested in the beta test, sign up for Astrobit, make an account, do your thing. You don't have to buy anything, but make an account there at least and get into the Discord. I think the Discord's actually open to the public anyway. So you can actually just go to discord.gg/Astrobit-trading. Ancient Aliens asking, when is it going to be implemented? I'm currently using your Venom strategy. So this is going to be implemented very soon. I'm actually going to be working that out very shortly here with Astrobit. The preliminary stuff is probably going to be going live next week. So like the update and this new strategy, like the update of this, I think is going to get pushed next week. Again, Ancient Alien, I know that you've been a subscriber for quite some time. I will DM you personally on Discord. You and me are friends. I will DM you personally with more details on that, okay? But I'm pretty sure, like 90% sure, it's going to be next week, okay? But that is coming very soon. And then the preliminary stuff, that's what's going to be open for the beta test while I'm actually running through, the strategy through the AI optimizer for obviously Bitcoin, and then a whole bunch of other pairings that I'm not going to name yet. Okay, I'm not going to name them yet, but it's definitely not just going to be Bitcoin and Ethereum. There's going to be, it's big. It's big. I don't want to I'm like getting too excited. I'm like, whatever. Cheers. Anyway, so first thing I want to look at, and I put this out in a tweet today, it is this. Okay, so these are going to be some of the things that I want to talk about next week. Really big week. It's kind of like the meme. Oh, it's going to be a big week, right? It actually is. On Monday, we have the home sales and durable goods numbers. Those are going to be coming out. That's kind of a big deal, especially when it comes to home sales. There has been a lot of questions about, like the state of the real estate market, right? So we're going to have a little more clarity on that on Monday, since it's the end of the month. Tuesday is going to be consumer confidence as well as the housing index. So basically lots of real estate numbers coming out, right? And consumer confidence, obviously that's really important. How confident in general is the economy, right? Wednesday, manufacturing PMI. And then Thursday is going to be jobless claims and unemployment. I think that those jobless claims are going to be extremely low. In 2022, big tech had 200,000 layoffs. So far this year in 2023, we're not even to the end of the first quarter. We've had an additional 200,000 layoffs. And the unemployment rate as it stands right now is 3.4%. It's the lowest that it's been since 1968. That's not a good thing when you've got inflation running super hot. Okay, that's not good. I'm not really going to dive too much into that. For the most part, you guys know basic economics at this point. So that's pretty much what that is. If you've got high inflation because of really high demand, that means that everyone's making too much money and unemployment is very low. That's pretty much how to sum it up. And then Friday, we get our services, consumer services and core services PMI numbers as well. So all of those different aspects of the PMI are going to be coming out next week. And then, of course, real estate numbers, consumer confidence, unemployment. Those are all pretty big stats to be getting in 1 week. And then on top of that, we have our earnings coming up next week. So these are some of the big companies to watch. I'll get my border off the screen so you guys can see the hidden companies here. A lot of these I haven't heard of, but on Monday, some of the big ones, Fubo TV, that's a streaming service. Zoom, everyone knows what that is. Workday, that's kind of like another like remote work kind of deal. Whoops, hold on. There we go. Let's see, what else do we got? Blackstone. Okay, Blackstone Secured Lending. This is going to be a big one, as well as LendingTree. I think a lot of the big like lending services and banks and stuff that have like earnings reports coming out, I think that we need to pay especially close attention to those because employment is at an all-time low, but credit card use is at an all-time high, which is, you can understand why that would not be good. On Tuesday, Norwegian Cruise Lines, that's a big one. Target, AMC, AutoZone, Advanced Auto Parts, Axon, Monster Energy, and those are pretty much like the biggest ones for Tuesday. Now, keep in mind which ones are before open and which ones are after close. Okay, so those are going to make a big difference in terms of like the actual index versus like the futures and people that are trading futures options and stuff. So just be aware of the times that those are going to be coming out. Wednesday, we have some other big ones: Wendy's, Salesforce, Lowe's, Dollar Tree, Kohl's, Jack in the Box. Just, you know, in general, pretty big names with those. Thursday, again, pretty big names, right? TD Bank, Victoria's Secret, Dell, Portillo's, Hewlett Packard, Big Lots, Nordstrom, Broadcom, Burlington. I mean, you know, you guys can read the names. I don't have to read them off to you. Thursday, in my opinion, is going to be the biggest day in terms of earnings for next week. And then Friday, there's a couple others. I've never even personally heard of any of those. Maybe you guys have. I have not. But in my opinion, Thursday, going in towards the end of next week at the very, very end of the month, or actually Thursday might be the beginning of, yeah, technically that's March 2nd. So, you know, coming into, you know, the beginning of the month, Kroger's on here too. That's probably going to be the biggest day for earnings report. So I would expect some pretty decent volatility coming into the end of the month and the very beginning of next month on the 1st and 2nd of March, when these earnings come out. Okay. Especially with, the jobless claims coming out on Thursday and the PMI, the manufacturing PMI coming out on Wednesday. That's March 1st and 2nd. Okay. So, just keep all of this stuff in mind for next week. If you guys want to bookmark this tweet, I'll post it in the chat here for you so that you guys can have that as reference for later on down the road. Let's bring my little camera back up here. All right. So now that we've covered most of that stuff, and I know that I went through that stuff kind of fast. We're already been in the stream for 15 minutes. I really, really want to be strict on these streams and keep them to an hour. Friday night, you know, the weekend and stuff is family night. Friday night's one of the only nights that me and my wife get to spend together. So while she's putting my daughter down to sleep, I'm streaming for you guys, having a beer, and then me and my wife do our thing and, you know, hang out, talk, catch up, whatever we need to do, because we work a lot. So let's dive in right into the charts. First, you guys know how I roll. I like to start on the higher time frames and work backwards. So last week, huge bullish engulfing candle. Okay. I think I kind of went over that. Well, actually, I wouldn't have been able to if I streamed on Friday because the weekly close for Bitcoin's Sunday. So still, regardless, big triple engulfing candle here. So this engulfed the last prior 3 weeks of price action. That's pretty big. Okay. And I'm not just referring to like, the size of the candle, right? Like that's a big week in terms of price action. Now, on this weekly chart, our on this candle, on this big green candle, our RSI did not budge at all. And in fact, what's happening now is this is tipping over and we're kind of getting like a flat top here, even though we had a higher high in price action on the weekly chart. For those of you that don't know, that's what's known as exaggerated bearish divergence. Okay. And now that's starting to play out here, at least at the beginning or, for this week so far. Obviously red candle, our momentum is starting to slow down here. It's looking like at the end of this week, if this price action turns around, we're going to have a confirmed cross bearishly on our MACD. This is a modified MACD, so I use different stats here. I find it to be more accurate. If you guys are interested in this free indicator, you guys can just go up to indicators, just type in KMAC and find the one that's by Author Cobra Trading, and you guys can have this on your chart, okay? That is a free indicator for you guys. Now, same thing here, pretty much. If we're looking at our on balance volume, we're getting that same kind of bearish divergence here, except this time it's not hidden. So we've got this higher high in price action here, and then we've got this lower high, okay, over here on our OBV. So in general, that's not good. Getting a lower high on such a big bullish engulfing candle, that means that in general, that bullish engulfing candle was lots of derivatives volume, and we'll be going over that in a minute. You guys know I love my liquidity heat maps and liquidity charts, so we'll be getting to that here in just a minute as well. But anyway, besides that, if we look at the volume per bar here, you can also see that obviously this volume per bar was also starting to decrease here as our price action is starting to flip over. So remember, guys, price structure first, volume second. Okay, those are the two most important things that you guys need to be paying attention to, especially on higher time frames. I am of the opinion, and somebody mentioned this last week, that maybe we end up turning this into some kind of weird looking high time frame head and shoulders. That is still 100% in the playbook here. I really don't like the structure of that because it's kind of like a Quasimodo double left shoulder here. I don't really like that. But regardless, at the end of the day, it doesn't really break any inverse head and shoulders rules, whichever left shoulder you're taking here. It doesn't really matter, but that is still in the playbook. Just be aware of that. That kind of classic charting pattern, okay? And we did reject perfectly right off of that, almost to the tick, right? It was literally within, I think, like $5 or $10 that we rejected from that same level back in August. So with that said, we'll come down to the daily chart here and just kind of get down into some more nitty gritty. You can see here more accurately depicted, and I went over this last week in my Bitcoin analysis short, that this volume during this entire uptrend, the whole second half of this uptrend here, was just lower and lower volume. That's typically not good for a real kind of reversal or a real pullback where we'd be breaking structure and making closes below this level of consolidation at around 21.5, 22K. I would like to see more bearish volume coming in here. Like this should be increasing. I don't like the fact that the bearish volume is also decreasing here. That tells me that maybe we could potentially see some kind of higher time frame, like rising wedge or channel here. Okay. The channel would be drawn like that. The rising, oops, what just happened? The rising wedge would probably end up looking, something like this, where we go down a little further or whatever, and you get a kind of rising wedge, some kind of thing like this, where we drop a little bit, maybe see a throw under, another one last pop to trap bulls at this major 26,000 resistance, and then a full-blown breakdown to retest those 20K major historical price points. Okay, so there's kind of a couple scenarios that are going on here, but we just have to watch and wait for the price action to develop, right? So same thing, you've got your bearish divergence here on the RSI, bearish divergence on the MACD, no big news there. This was something that I thought was interesting as well, is on our on balance volume. I mean, this really dipped down far, like really far. We're talking like, January levels here. And the level of the price is just so much higher. I mean, these levels that we're seeing now on the OBV, we're back at 17K. We're up at 23K, and we're seeing those same levels on the OBV. That's typically not a good thing. Even on pullbacks or whatever, I'm very surprised that the on balance volume dropped that far. In that short of amount of time. Like just in a month, we went back to prior monthly lows in terms of the OBV levels. So that's something that I'm watching very closely here. There's a lot of important levels on this OBV that we have broken, which are not really a good sign, right? In general, we want to be seeing this making higher highs. And in terms of the structure on the on balance volume, this is already pivoted. We never got the full breakout like the price action. Okay, we never got the full breakout. We made that double high, double top reversal, and we haven't even made lower lows and true lower lows and lower highs on the overall price structure yet. But that's what we're already seeing here on our on balance volume, which is not a good sign. That tells me that the trend might be flipping over. But again, obviously we need to let price action develop a little more. We'll come down to a 4-hour and go over the chart that I posted today. And then we'll take a look at liquidity real quick. And then I should have time to take a couple chart requests from you guys. You guys know I love, hearing what kind of bullshit shit coins, you guys are getting into. So we'll go over some of that stuff as well. Let me drag this way back over here. We are at monthly demand levels right now. I was considering hedging long today on this, but I decided not to because this was not a very significant bounce in this last 4-hour candle close as a doji. Not a good sign. So let's go over this in more detail. Let me actually bring it down to a 1-hour and just kind of show you guys how I was playing this. So I've been short from, where is my short? I am short from 24,000, basically 700, 24,710 is my short position. Okay, so about here. Okay, this is pretty much where my short was. Now, I've been short, since like the 20th or the 21st. It's been a long hold, and unfortunately, I missed this to double down on my position, which kind of sucks. I'm not super happy about that. I wish I could have doubled down here. I missed it. I got excited and I was like, oh, sweet. It's going to come back up past my entry. I'm going to be able to raise up, my average entry. I'll be able to get an ask in at like 25K and raise it up. It actually just barely missed the entry that I already had. And then it immediately reversed and I never got the chance to double down on my short position. It is what it is. I'm upset about it, but whatever. I missed the chance, and unfortunately, I'm only in a quarter or half size position or whatever it is. But going over this chart, right? So we had this range defined pretty early on into our top. I have since dubbed this manipulation, this little throw under here, because this basically had formed a ascending triangle. And it reversed really quickly and bounced pretty hard here. So since then, as price action developed, clearly this was our range high here. We've tapped that a couple times. And then since then, we've also tapped down back into these, like major range low kind of territory here. But on our way down, when I was watching this on a 15-minute chart, are those really not? Oh my God. Seriously? Probably should have set that up before I tried to show you. I got all excited. fuck? Now let's come down. So on a 15-minute chart, as I was watching this breakdown, these were very, very nice, clearly defined levels of support and resistance here, okay? We had this first level, we broke down, we retested it once or twice. Then we have this level over here from consolidation back on the 20th. We kind of tested that, bounced back, rejected, broke down again. These levels here broke back up, retested. These were very, very nicely well-defined breakdowns and retests, and breakdown and retest, and breakdown and retest, and breakdown. Broke back through a couple levels, rejected, came right back down. This faked out a lot of people. This was like just a massive liquidity grab. And then over here on the smaller time frame, we ended up forming, pretty much a bearish pennant. Okay, that's pretty much what that was. Had a little bearish pennant here, broke down, had a couple retests, broke down again today. Okay, so this was very, very good trading for me. You guys know, obviously trading in ranges isn't for everybody. I absolutely love range trading. Like, it's really, really good. If you're really good at being able to define your levels of supply and demand, which are obviously your, support and resistance. If you're good at being able to find those, whether it's through order blocks or with volume profiles or however you decide to define your levels of support and resistance, if you get good at it and you practice it, you can also succeed very much in range trading. The only thing is about range trading is it requires a ton of patience. If you're not patient, you're not going to succeed at it. Like, if you want to just be trading super low 1 minute, 5 minute time frames, range trading is definitely not going to be for you. That is not going to be a thing for you. Because you're just not going to have the pay. You're not going to want to wait that long for the price action to develop. I used to trade on really low time frames like that too. And I ended up losing more money than I was making because there's just too much noise. And I was very rarely, like the whole term today on crypto Twitter, and it's always a bear market thing, is, oh man, zoom out. I never zoomed out. I never looked at greater than like a 15-minute time frame, and it just destroyed me because I never really saw the big picture of the price action. So when I started changing up my trading style, starting on a high time frame and working back down and working down through the time frames instead of trying to work up through the time frames, I started becoming a lot more patient with the markets. I started understanding market structure and price structure better. And I started developing more patience to allow higher time frame momentum and volume give me the overall picture of what's going on, so I could find better entries on lower time frames and hold those positions for longer with higher reward trades and lower risk setups, because I was being more patient and waiting for those areas of supply and demand to tap before I started entering. And then I obviously moved on further and discovered how, you can position size yourself and ladder entries and stuff. And all, if these things are foreign to you, I'm going to be redoing all of my tutorials on YouTube for all of this stuff. Okay. All of it. A lot of those tutorials are old, they're outdated. Or I made them years ago when I, had less experience than I have now. And some of the information may either be slightly incorrect or maybe misleading, and I need to update those. I'm going to be re-releasing all of that stuff, guys. So no worries there. Cheers to that. Again, make sure that you smash that like and subscribe button so that you guys get notified whenever I put those videos out. Anyway, I think that's pretty much it for the price action on Bitcoin. Right now, it looks like, we might be seeing some kind of little dump here or whatever on the 1 hour. Lots of volatility here, right? And I think that we're going to be chopping through here for the most part on the weekend. Again, we've got this major monthly demand here. So I know that on the right side of my screen, you only see this box. Well, hey, Cobra, how'd you come up with those levels? Well, you look left for clues, right? Clearly, we had a ton of consolidation in here, right? Well, that level also has way more historical value if you zoom out and you start coming back to these levels over here, okay? In August, and even before that, when we had the big FTX dump back in, wait, was that the FTX dump? No. This was the FTX dump in November. So this was before. This was like the Celsius crash or whatever, but they go back a long time. Like this is literally June last year that, that these levels are relevant for. Don't delete these things off your chart. If you're identifying these on high time frames, don't be deleting the stuff off your chart, man. Leave it there. Like it's gonna be useful. Like how would I have known to short this top on this big volatility, right before an FOMC week, if I didn't already previously like if I would have drawn this here and then deleted this level when we broke down, I would have never known to short this. You know what I mean? Like I would have never known that we were going to consolidate here in this area before we broke down out of an overall channel. And we had this little flag within a giant, daily time frame flag. How would I have known to do all those things and get into a position here if I would have deleted this level months beforehand? I wouldn't have. I would have missed a lot of opportunities. So I urge you guys, when you guys are finding important levels like this, keep these. Like, look at how relevant these levels are when you find them. Consolidation, breakdown, rejection, double top. Broke above, support, broke above to the next level, rejected, broke right down through everything. Like these are levels that you guys can be playing on these higher time frames when you identify them, and then you can pinpoint those entries with ladders and stuff like that. Ladder your entries, break your entries up so that you're not going all in on one entry, and then you can average into your position on a lower time frame, spread your bids or asks apart, slowly build your position, and then on the higher time frame, if you've got a high conviction for that setup based on your trade rules, you can profit from it long term, and it turns into a really cozy swing position. I've been short on the position that I've currently been holding since the 20th. So the beginning of the week, I've already been in that position for a week, and it only really just started moving. I plan on holding that for quite some time. I don't normally, I'll set a stop loss with my entries and my ladders, but I never set take profits. I kind of decide on my own when to be taking profits on my trades. And normally, because I'm really big on volume per bar, as well as, like volume profiles and on balance volume and stuff. I'm a really big like volume and momentum trader. Again, price structure first, volume second, right? When I start seeing momentum and volume start to shift, that's when I'll start, taking profits on the current position that I'm in. But I won't close out fully. I'll, like right here, we're in monthly demand. We're probably going to be retesting this area for quite some time. I'll probably close half of my position here and maybe decide if I want to hedge long and pop open a long scalp, right? To kind of hedge my short while we're getting volatility in here. I can almost promise you we're going to come down to like 22.5 or 22. Oh, what was that? 22. It was like 22.4 or something. That was like a really like common level down here where we kept bouncing. It was like 22.4, 22.4, 22.4. And we kept bouncing there. So like my eyes are on 22.4 as a target to close half my short. And then I'm thinking that we'll probably see some kind of bigger reaction in this monthly demand, pull one of these, retest these lows that we just broke, right? Support turns into resistance. Wait for a rejection there, probably long here, close a long scalp here, add to my short potentially. Again, this is all based on volume and momentum, and then look to play the lower intramonth support to fully close out my short position. But a lot of these things, this is why I don't set targets and stuff like right away. It's like, it's okay to have a general idea of where you want to be exiting. But if you have like your mind set on a number, I mean, the market's always going to play you. It's always going to seem like the market is front running you, or, the market makers, they know where my limit orders are. The exchange knows. It's just market sentiment and volume. If the volume shifts before your targets hit, you're caught holding your bag, and now you've got less profit than you would have had if you would have just looked at volume and momentum, and you could have exited there anyway, and you didn't have to exit at a number that was in your head. if that makes sense to you, make sure that you smash that like and subscribe button. Again, follow me for more hot takes on the market. Okay, so at this point, I don't even know how many people are watching this. If there is anybody in here, go ahead, go into the chat. If you guys have any altcoins or anything like that, questions about the market in general, questions for me, about the markets, about altcoins that you want to see, whatever. At this point, I'll go ahead. I'll take a couple of those. We've got about 25, 30 minutes or so. I'll go ahead and do all of that. And then, yeah, that'll pretty much be the whole stream. So while you guys are getting your thoughts together and or any questions or charts that you want me to look at, I'm going to go over here and we'll take a look at liquidity. Okay. So first thing, well, let's look at the heat map first, right? If we come down, oh, by the way, so I'm not sponsored by High Block Capital. The reason why I promote them is because this is a tool that I pay for, and I use this literally every day. If you guys want to get better at trading with volume and momentum and liquidity and stuff like that, and you guys want to have a better understanding of this, this is a fantastic platform to be doing it on. Again, link is down in the description. I do have a referral link that just helps support the channel. Literally, I reinvest any money I get from referrals right back into like equipment and stuff that I need for the streams. Okay. It doesn't go in my pocket. It goes for content for you guys. But anyway, they did recently just add this ability where you can actually select the 3 multiple exchanges that they do have for their heat maps, so that you don't have to just look at one at a time, right? So there's Bybit that I'm looking at now, but I can add BitMEX and Binance to it, and it will aggregate all of the estimated liquidation data onto one chart, which is really cool. So I personally love this. The fact that it aggregates all of the data, it is super helpful because it's giving you basically an average around where everything is at. So first I'm going to take a look at this on the 7-day chart, and then I'll go over to this one, which is the individualized levels, and I'll dive into this for just like a minute or two. And then I'll go ahead, and I see that all of you guys are asking questions, which is awesome. And I'm going to get to those right after I do this. Okay. So on this 7-day chart with the 3 major exchanges aggregated, you guys can see we've got a pretty substantial block of liquidity down to about 21.5. Okay. So obviously 21.5 is going to be a key level. So remember that number, 21.5. Okay. Now, just in front of 22K, 22,300, it looks like there's a yellow bar there, which means if you look over to that left side, that's 4 billion. Okay. Up here, that's 4 billion, almost 5 billion, right? So there is tons of liquidity below us yet to be taken. And that's just on this little weekly look back period. If we scale this up and we go to a month, this changes drastically. Now you can see that liquidity moves a lot further down, closer to 20K. And then there's a lot more liquidity below 20K. I'm not going to get into any of that. But around 15.2K, there's $200 billion worth of leveraged longs across these 3 exchanges. Just keep that in mind. Now, I don't think that it's guaranteed that we hit those levels, right? Like nothing's guaranteed. For all we know, a lot of those positions, if they're experiencing drawdown and they're losing money on it, they're just going to close out their positions, right? And I think that that's probably what's contributing to the shift in momentum that we're seeing now. Is we've got longs that have been long since 15K that they thought that they were going to get it all the way to 30. Now they're realizing that the market is starting to maybe flip over here. So they're starting to average out of their position. So liquidity is always changing, just like the volume and momentum is. So kind of have to take it as it comes. But yeah, basically 21K is like the big area to be watching. So 21 to 21.5, really big area to be watching there. If we come over to the individualized levels, okay, and we take a look at this, for right now, this is pretty much all that we can see because this is a much lower time frame kind of deal. Now, shorts are massively off sides here. When this is red, that means that it's shorts that are offsides. Okay. Or shorts that are offsides. So there is almost 10 billion, 9.5 billion cumulative just on Binance. This is Binance only. What's the equivalent indicator to high block? I don't really think that there is one unless you, I would take a look at Spaceman BTC. He's on Twitter. I don't know if you've heard of him, but if you go, this guy makes killer indicators. Spaceman at Spaceman BTC. Go check out his stuff. He has a website as well, like on his profile and stuff. Cuban's Edge. He works with Cuban Tobacco. Okay. They've been in the space for a long time. They make really high quality stuff. I know that they have one. I just don't know like what it costs and what you would have to decide for yourself, like value for cost or whatever, like this platform versus his stuff. You would just have to weigh that for yourself. That's obviously not something I could tell you, but this is why a lot of people think that we're going to bounce here back to these individualized levels is that, oh, look, there's not very much long liquidity below us, but this is such a low time frame here that, yeah, sure, we could easily bounce up to 23.5 right here, snag all of this, these 50x shorts, and then just come right back down. And it's a little bull trap, right? And fuel for more downside. That's probably what's going to end up happening. People that short all the way up in a bull run or in a move to the top side, are usually the same people that are trying to buy every dip and knife catch all the way down. That's just kind of the way it goes. Don't be that guy, right? Like trade with the momentum, trade with the trend, plan the trade the plan, all those little things. You guys know. So let's go through some of these questions and stuff. Leo Crypto 88, thanks for joining us. It looks like we've got Soul wants to take a look at Soul. We can do that. I don't think I have it here. It's probably on my altcoin list. Soul. Come up to a weekly first. Oh man, that chart does not look good. Well, I can tell you, Jesus, that looks so bad. Right off the bat, this does look terrible. I will tell you that I would say probably this area here. Yeah, you're in a pretty major level of resistance right here on the weekly. This is like 2021. This is like multi-year resistance that you're at right here. I would be very surprised if this continued to the top side here this quickly. With such a major level like this breaking down so hard, I would be very, very surprised if this just broke through that on the first try. I'll take a look at a lower time frame here in a second, but I just want to get a feel for what's going on the macro. Clear downtrend here on your OBV. Okay. That's very, very clear. Lower lows, lower highs. So no divergence to speak of on the OBV on the weekly time frame. The momentum is dying here. Like the bullish momentum died on this, and you've got a cross that's about to confirm on your weekly chart that's bearish. So that's also not good. The volume is just atrocious here too. Look at the volume back here. And then look at this volume on this pop. It's just like nothing. Like I don't think this is going to see any follow through. It looks like $26, $27 is going to be like your lower time frame resistance here on this. So let's make this only visible on the weekly. And we'll come down here. The volume is pretty steady on this 4-hour time frame, which is good, but I mean, in general, compared to like the overall markets, it was like really atrocious. So let's come down here. Looks like we're kind of ranging here, just like Bitcoin. Let's get this off the screen. So, well, your most recent swing high is up here. We'll make this white. It looks like your most recent swing low is down here. Okay, so That's kind of how I do, is first I go through and I label the extremes, and then I kind of go through and find like the average. Okay, where's my average major resistance at, right? So, you know, you could probably call this your major resistance up here. Okay. And then you could probably call this down here your major support. Okay. So that's just kind of how I draw my supports and resistances. Everybody's going to do this differently. Okay. I know that I move through these really quickly. I look at charts. I've been looking at charts and trading all day, every day. Well, I don't make new positions every day, but I've been trading for 12 years. Practice makes perfect, right? It's going to take you a while to be able to do this as quickly as I can. Your midline is kind of like around this area. So you're bouncing off your midline right here. We'll make this a dashed yellow line for visibility. So that's kind of what you've got here. Now you've got your ranges, right? Okay, cool. You've got your swing high, you've got your swing low, you've got your major level of demand, and you've got your major level of supply. Okay. Now down here, it's kind of like, okay, what's the volume doing? Well, it looks like the bearish volume might be decreasing here. But if we look at some other indicators and we see what's going on, your momentum just keeps dying here, and your momentum is definitely in bearish territory now. So that's not a good thing. What's the OBV doing here? Oof. So you've got lower lows, or you've got lower highs on the price action, and you've got a double top here. A lot of pairings are doing this exact same thing right now. It's not just SOL and Bitcoin, but so you've got this lower high in price action, and you've got an equal high on your indicator. That's exaggerated bearish divergence. Very, very, very weak bounces with gravestone dojis. There's one doji here, and then you've got a hanging man doji. That's bad. That's not good. That's exactly why this is probably rejecting here. There's just not enough bullish momentum to be pushing this higher. I personally see lower than here. But if I wasn't in a position like if I'm not already short on this from our supply areas, I certainly wouldn't be trying to catch this long here. Like, you need to wait for some kind of consolidation. Plus, in general, my rule of thumb is when you've got a range like this, do not trade the midline. Don't enter positions out of midline. Midlines are for closing out half of the position that you're already in. This is why range trading isn't for everybody. A lot of people are like, oh, well, it looks like a major level of support. It's not. It's a midline. These are your major levels of supply and demand. Don't open positions here. If you were short here, if you were short from up here, I'd say take half profit. Leave the rest open, move your stop in break even or into profit. It's a risk-free trade. Maybe you get another chance to exit down here or a long down here. But this looks like it's got more in it for downside here, I would say. The only bullish thing that I'm seeing right away is that while there's exaggerated bearish divergence here, there's technically bullish divergence here on the bottom. Now, that means which divergence is stronger, right? You've got hidden divergences, which are the strongest. And then you've got regular divergences like this that are strong. And then you've got exaggerated divergences, which are weaker. Okay, so in that aspect, I would probably be monitoring this. And I would just flag it on my watch list and check back in on Monday and see, okay, is it consolidating? Did the volume shift? And kind of go from there. But if you're already short, I don't see any reason why you couldn't take half profit now and move your stops to break even, or in the profit. Let's see. Martin wants to take a look at SPX. So let's go ahead and do that. Your analysis is top notch, my friend. I was wondering what indicators you prefer for volume on TradingView. I use XO charts typically if I am looking at volume, but was wondering for TradingView. So again, Spaceman BTC has an indicator that is almost just like ExoCharts that works on TradingView. It's a TradingView indicator. It's not free, but it works very, very well. I don't pay for those personally. I typically use my volume indicator. So this is called the Wada Atar Explosion. Can I like reply to a certain, not giving me options here in this chat. I can't like reply to it. That's dumb. Doesn't let me like reply to that message. It's called the Wada Atar Explosion. It just measures volume differently. But in general, I use something that's going to be volume per bar. And then I do something that's like cumulative volume, like the OBV. If those aren't really your style, then I would highly recommend, like I have this as another chart layout. I'll just show you. Wait, no, I don't want to leave. I'll just open it up on a new tab. Okay, so actually this is a Spaceman BTC key level, but this one, that one's free. This just gives you order blocks, right? So it tells you the weekly open, yearly open, monthly open, current high, previous high, quarters, all of that stuff. It gives you the order blocks, right? Which is super helpful because I use this on a lower time frame to see where momentum's going. I use an SMI indicator up here. Again, my Wada Atar Explosion. But if I'm just looking at the chart, that's what I use. That's what it looks like. So these are, this is a VWAP with standard deviations. Okay, so this is called the VWAP Standard Deviation Bands version 2 modify. I didn't change any of these settings. Okay, these are all default. I changed the colors. That's pretty much it. But this is like my mean reversion strategy. Okay, and then obviously you've got your volume profiles here. Okay, so these are daily volume profiles with the highs, the lows, and the yellow line is your point of control. Okay, so your POC. So in general, on something like this, we had a big point of control here, right? And it looks like we swept our monthly open. We swept our previous, oh no, we haven't swept our previous daily low. This is the previous daily low, but we swept our monthly open, right? So if I was looking for mean reversion and looking to play a bounce on a small time frame, I would be looking to sweep our Monday low and take this naked point of control. It's naked because it hasn't been retapped yet. Okay. So that's kind of like a mean reversion volume strategy that I use. I hope that helps you. Let me close this. I'll take a look at SPX real quick. Giving you guys like mad alpha on these streams. SPX, that's on my normal main. Here we go. SPX. All right. So I'm going to take that off the screen real quick. Take all that other bullshit off the screen. We're going to go to a daily. This is what we got, right? Everybody is familiar with the daily SPX chart. Now, I had a couple questions about this in some of the discords that I'm in is, where is the, can you do TA on Blocktopia? I don't know what Blocktopia is. What's the equivalent indicator? High block, your thoughts, SPX. Okay, cool. I got everybody. Now, SPX. This is, this is a tricky one because we've got a lot of earnings coming out next week. So this is going to tie in a lot to the stuff that I went into at the beginning of the stream. If you weren't there for that, the tweet is listed in the chat, and that is all of this stuff. Okay. All of these earnings, home sales, durable goods, consumer confidence, the housing index, PMI numbers, unemployment numbers. That is definitely going to play a factor in all of this. Okay. Especially those early week earnings, which are heavily tech companies. Okay. So that would be something that's going to play into this a lot. Now, the jobless claims are going to be low. We all know that the unemployment is low as shit. I don't expect it to change. Even if it ticks up, it's probably going to go up like 0.1, 0.2% or something. It's not going to be anything. We're still at like 50, 60 year lows for unemployment. So those numbers obviously are, the Biden administration and the political aspect and mainstream media is going to be like, oh, we've got a strong economy. Yeah, that's not good, as I explained at the beginning of the stream. But as of right now, this chart to me, right off the bat, looks like a bullish retest, right? We've got a massive trend line that goes back all the way to January last year. So this is a 1-year trend line that broke, rejected at major resistance, like major multi-year resistance. And now we're getting a test here. Now, to me, off the bat, this looks bullish. In terms of Elliott wave theory, this is a reversal. Because if you're looking at this, I know most of you guys probably don't know Elliott wave theory, but if you're looking at this as a wave 1 and this is a 2, this is already an invalid wave 3. And this can't be a 4 because it came into wave 1 territory. So in terms of price structure, that's what Elliott wave mostly teaches you. It's not meant to be traded off of. It's meant to teach you price structure, right? And kind of get a feel for where the market could be going. In terms of price structure, this looks like it might end up coming down further. Now, again, a lot of this is going to depend on next week. I would suspect that if we do break down from here, for all I know, who knows, maybe we get a throw under, we hit these levels of demand and then we continue higher. I don't know. I don't have a crystal ball. But if I was going to be short on this, or if I was already short, I would definitely be taking some profits here in expectation of maybe seeing these levels down to 38.50-ish. Now, if we take a look at volume and momentum, okay, this is our volume and momentum. Momentum is bearish, right? That's really all you need to know about the MACD on an indice. Okay, it's not really going to tell you too much because on indices, like crypto markets are mostly fueled by like derivatives volume and stuff like that. There's very few news events that are actually going to swing crypto markets unless it's like a black swan event, like, Celsius 3AC, FTX, things like that, right? Like those news events will swing crypto, but for the most part, crypto don't give a shit. Okay. Now legacy markets, 100% different. The news is what makes people emotional, and those emotions that people have move the market. So the news indirectly moves the markets. We all know this when it comes to legacy markets, right? So next week, the news is going to be, in my opinion, probably pretty bearish when it comes to the PMI numbers. I'm not expecting those to look great. That's just my own personal opinion. Not financial advice or anything, but I would be assuming that we would probably see this moving lower. Now, another reason why I think that is because you have to take the dollar index into account here. And the dollar has been ripping, okay? Now, it's not ripping as hard as it was before, but it's ripping nonetheless. If we come up to a weekly chart here and we look at our overall price action of our dollar, right? Going all the way back, 2008, right? Huge consolidation pennant, broke out of it, right? This is like not good. And then we were consolidating all through here since fucking 2015, okay? Metaverse project listed on KuCoin. All right, I'll take a look at that in a second, Pedro. Appreciate it. Do you know what the ticker is? Just list the ticker for me. It's probably, what did you say it was? Block. Where is it? Am I self-taught? How did I learn to trade? Oh shit. Lots of trial and error, dude. But I mean, yes, in general, I'm self-taught. It was lots of trial and error and lots of wasted money on bullshit courses that regurgitate the same incorrect information. I pretty much read tons of fucking books. That's pretty much what I did. I learned tons of books and failed and tried again and failed and tried again. And when I say fail, I mean blow up an account and then try again, and then fail and blow up an account and try again. Blowing up an account and then losing money in the markets, that's pretty much you're paying for your education. I highly recommend journaling. And if you're going to try a new strategy, I highly recommend paper trading that strategy before taking it with a real live account, 100%. But yeah, for the most part, self-taught, man. Like you can't really, I mean, unless you have like a really good mentor or something, like, you know, it's just something that you have to learn. You can't really like go to class to, you know what I mean? Like there's no college course like, oh, how do I become a fucking hedge fund manager? How do I learn how to scalp markets with margin? And like, there's no classes for that. And the courses that are available online, most of them are from LARPs that they're not really traders. They're making money because they're selling fucking courses and they're teaching shit that they don't even really understand. That's why I don't like, I mean, I am going to have a course myself that I'm putting out, that I'm re-releasing when I launch my website. I mean, you guys can easily tell, like, I'm not a LARP. So, you know, whatever. The people that think I'm a LARP, I just laugh. It's really funny to me. Anyway, as I was saying about the SPX, I expect this to keep bouncing here. The dollar has a massive effect on the markets here, and all of the bearish momentum here completely died. Like all that bearishness just died off here. So this is looking extremely bullish. We got like a little fake out cross here on the MACD, and it's still continuing another bullish trend. Like this is rare to see here. Let me show you this close up on this MACD. See how the momentum started dying and then it was like, oh, fake out. That is very rare to see on a MACD. Okay. Like this is on a weekly chart, mind you. Look at how long we can go back and look at this, and you do not see that anywhere through here again, where it turned a lighter green and then boom, a big dark green momentum bar. This is the last time that happened, was here. And that was 2019 in March. Hasn't happened since then. I would expect this dollar to keep going. Okay. We tapped the 0.5 retracement on the fib. If you drag our low to our top here, our low was back in January 2021 to our high that just recently happened up here, you know, in September last year, September. Okay. And all of that, you know, this was like up only markets, right? This was all retail. Oh my God, the bear market is over. Yeah, we're rallying. That's what this was. When the dollar index goes down, the markets go up. Okay. So when this starts going up, markets start tanking. Another really easy like base correlation that you should definitely familiarize yourself with if you're getting more into legacy is take into account what the yields are doing. So you know what I mean? Like look at the 2-year yield, right? Like on a weekly chart, this thing is fucking ripping, right? Like if this continues to continue to rip higher, I mean, like holy shit, right? Like, you know, look at these yields. I mean, we're reaching levels that we haven't seen since 2007. That's kind of a big deal. Now, a lot of people are saying, oh, you know, like it's going to, you know, it's losing momentum here. It's going to start turning around. I mean, yeah, it could. There's bearish divergence here on our 5-year yield on the treasury notes. Yeah, it might turn around. Like if this starts coming back down, markets might start pumping. But, you know, in general, when yields go up, stocks go down, right? You know, like people are either interested in stocks because they're pumping or yields because they're pumping, and money flows from one to the other. Just like in crypto, market flows from Bitcoin to large caps to mid caps to small caps, and then the cycle repeats. It's kind of the same thing with legacy markets, where it goes from, you know, like indices to stocks, you know, to bonds, you know, and the cycle and real estate, you know, like the sectors, you know, there's kind of like a circle of life, if you will, in terms of how the money flows. As long as you start familiarizing yourself and you start understanding how those patterns work, it will, over time, it will reveal itself to you. You'll understand, and you'll be able to use that to your advantage over a longer period of time and really know how to balance your portfolio, how to rebalance, you know, when cycles are starting to shift, and, you know, it'll help you. Let's see. I was here. Thanks, brother. Metaverse project listed on KuCoin. Blocktopia. Okay, let me look this up. Blocktopia. KuCoin. All right, guys. We got a shit coin. Oh, Jesus. CoinGecko, right? Is that what it's called? CoinGecko? Before I even look at the chart, I want to look at this. I'm sorry. 24-hour trading volume is only 1.2 million. Supply is 200 billion. Jesus Christ, guys. This is the kind of shit that I stay away from on purpose. Jesus Christ. It's 0.003 of a cent. I don't really know what to say on this. The trading volume is very, 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 very low on this. 1.2 million is super low. There's more information on this. It trades on Bing. It trades on KuCoin, BitGet, Gate.io. I mean, it's trading on some pretty decent exchanges, which is good. But what's the market cap? Wait, what? How is the market cap 0? That doesn't make any sense. What? How's the market cap 0? Like, I'm not high, right? Like, I know I'm not high. I haven't smoked. Do I need to get high to chart? I'm getting high to chart this thing. All right, Pedro, I'm getting high to chart this thing. And you need to let me know in the chat if this is like a project that you believe in. Because damn, tokenomics. Tokenomics are unavailable. There's no developer repo. They have 340. That's actually a big Twitter following. And that's a lot of Telegram users. But obviously we don't know how many of those are real people. Historical data, not really too much. Damn, there's no links to like the tokenomics or the white paper or anything here. Where can you buy it? Sometimes they don't list the market cap. It's all-time high, all-time low, fully diluted, market sentiment. I mean, I'm going to have... What the fuck, man? All right, so back to Twitter we go. Blocktopia, I'm assuming this is the right one. Yeah, they do have a shit ton of followers here. Wait, are they sponsoring this fight with Jake Paul? Or are they just tweeting about it? Is this a thing? Okay, well... Okay, let's just go to their website. Reblock NFT. Actual game footage. So is this a token that's associated with like a VR game? I'm assuming, okay, yeah, it's a decentralized metaverse built on Polygon. Okay, good chain. Good chain. I like to see that. Skyscraper made up of 21 levels to pay recognition to 21 million Bitcoin. Token holders will be known as Blocktopians and act as a central hub. Earn and experience the first time ever access crypto immersive content in one place. Blocktopia will be able to huge revenue through real. Okay, so it's like decentralized, like it's on Polygon, it's decentralized, and it's like a game, but you can like own real estate in the game with it and advertising revenue and stuff like that. Ever-changing reality on the block. According to Zion Market, the global augmented and virtual reality was, yeah, that's just a market statistic though. Bringing NFTs to life, the metaverse. I don't see this is a hard one to call for me, man, because we're in the middle of a bear market, which is good to see that these guys are like developing and coming out and building stuff in a bear market, which is like no joke, very hard to do. Oh my God, it's BitBoy. Typically, if I see BitBoy's name on anything, I avoid it. Just a rule of thumb. That's just me. That's just me, though. I think BitBoy's a total piece of shit. He's a pump and dumper. He's a scammer. And I think that he should be investigated by the SEC. That's just me, though. Their team looks doxed. I don't know if these are real people. I remember in 2017, they would dox the team, but they were like using Getty images of like models and stuff. I would have to look into this more. They have a white paper or something. Okay, block Pat Job. Is that supposed to say Jobs? Please don't tell me that oh my God, they misspelled it on their website. How to join? No, they didn't. Okay, it's something called Job. Yeah, no, I would have, this is all very confusing to me. Like, I'm an old school guy, man. Like I trade the charts and like all of these fucking metaverse things. There's just so many of them. Like the market is so diluted with all kinds of this stuff. It's just really hard to tell which ones are going to make it and which ones aren't. This like all this virtual reality and augmented reality stuff is just like, I have no idea. This to me looks like it's going to zero. Like this chart immediately, it looks like it's going to zero to me. This is not something that I would invest in, especially not here. This is way too early for this. Going off of the chart alone, this looks like a pump and dump. Like all the volume when it released, boom. And like all of this looks like the owners dumping on retail here. Like the volume, there's just no volume here at all. Like this is terrible. If you're trading, like if this is a project that you truly believe in and like you've read the white paper and stuff like that, like I'm not going to knock it because I haven't, but first impressions right off the bat, BitBoy's name is on it, which this is a typical BitBoy chart. That's typical for BitBoy when he endorses a product. Yeah, we're going to the future, the metaverse. Yeah, buy this coin. And as you're buying this coin, he's fucking selling. So that already is one red flag to me. I would need to read more about their tokenomics and what their actual idea is, versus like other projects that they have going on. I've never even heard of this, so I would personally have to do more research. Trading off of the chart by itself, I mean, it looks like it's at a pretty good it's reclaimed a pretty important level. Like we're talking just the chart here. I don't want anybody to think that I'm like, I don't even know if Pedro's still here. I don't want him to think that I'm like shitting on this because I'm not. I'm just like really brutally honest. Like I'm not here to, you know, if I hurt your feelings, like whatever, like I'm sorry, but not sorry. This regained a really important level of support here. So like this was a pretty big breakdown for this. For right now, at least, this is your swing low. This is your swing high. This is your major support. Okay. Okay. So those are the levels that I would be watching. Now, I mean, this is one of those coins where if I threw $1,000 at it, I would have like a fucking million of them. I would go very easy on this, and I sure as hell wouldn't be using any leverage on this. Trading coins like this that have very limited price action and like very little history, and you know they're new, they've just been released and or potentially pump and dumped. I would be very careful. This definitely wouldn't be my first choice to just trade. Now, if you're trying to like invest in this and stack on spot, I would say, yeah, I mean, maybe like if you know a lot about this project and you've read their white paper and you've done your due diligence and you believe in their vision and you're a part of their community and their community is good and their devs are on point and it doesn't look like a rug and, You know, like if you've done your due diligence and this is something that you've dived into that you believe in, then I would say, yeah, go for it, but don't trade it on leverage. That would be my best advice to you. My other advice would be, if you're thinking about accumulating it because it is something that you believe in and you're part of the community, but you haven't bought any yet, I would be waiting for these levels to be hitting, because you already broke down through here. Okay, you already broke down through this level on a low time frame. Like this is like a 15-minute kind of situation here where you already broke down through this level. Okay, and you're continuing to break down, and your bullish momentum is dying. I would be looking for lower on this. And I mean, shit, the thing isn't even worth $1. Where do you buy it? Like 0.003 of a cent or like 3 millionths of a cent? I just don't understand. There's too many. I think the biggest red flag for this to me, if I want to be really honest, is and I could be totally wrong. This project could go to like a fucking, $1 billion or whatever. I could be totally wrong on this, but the total supply on this is 200 billion. That's why it's so valued so low, right? Like this is like the kind of thing that we saw a lot in 2017 with all the ICOs and shit. There's like millions of ICOs, just everybody clamoring in, oh, this new ICO, that new ICO. There was tons of money being thrown around. And what ended up happening is like basically all of them went to zero and got delisted because there was so many surrounding one kind of idea. Like it's kind of like in the middle of 2021 with the NFT craze, right? Like there was a million fucking NFTs. You had literal pictures of rocks selling for like $1 million. Like, what the fuck? Are you serious? $1 million for a picture of a rock. And it wasn't even like a pretty rock. It was like a 2D, it was like 2D nonsense. Like there was literally like drawn pictures of dicks that were selling for 6 figures. That's what you call an overextended market. Like it's too saturated. Like it just doesn't make sense anymore. And right now, that whole thing, like moving on from, first it was the ICO craze in 2017, then it was the NFT craze in 2020, 2021. And now it's like the metaverse thing, like metaverse and like AI and stuff. Like that's like the next like thing. Like there's always like one hype thing that's taking place. But it's like back in the 90s with like the internet and all the search engines, right? There was millions of search engines popping up all over the place. No one knew which one was going to survive. It just ended up being like Yahoo and Google. But like Ask Jeeves and all of those other ones, like they just disappeared. Like for the most part, they disappeared. They went bankrupt. So again, I don't really want to shit on anybody's, like project or something like that. But in my opinion, this is like way too early to tell. And I would have to do a lot more research on this project in particular before I made any kind of investment decision on it, because the chart looks like complete ass. And a 200 billion supply is like, I mean, the chances of this even going, back to like 5 cents is like very, 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 very slim. Like there would have to be a ridiculous amount of volume to even get this thing to 5 cents from here, because there's a 200 billion supply. So, you'd have to have people buying millions and millions and millions of these things to even get the price back to 5 cents from here. So I would be very cautious on this one as an investment. But if it's, like I said, if it's something you believe in, cool, kudos, more power to you. I would personally wait to look for lower from here off of this though. But anyway, it looks like I'm about 20 minutes over time. So let me go ahead. I'll do a quick outro real quick and we'll go ahead and end the stream. So I really appreciate you guys hanging out tonight. Thank you very much. I hope that you guys enjoy the knowledge, enjoy the alpha, enjoy the stream, all of that good stuff. Again, make sure that you like and subscribe down below. Check out all of the links and stuff. Some of those are referrals. If you guys need a VPN, if you guys are interested in High Block Capital, again, I'm not sponsored by those. Those are ref links that if you guys use them, it helps support the channel. I really appreciate it. I will be back again, obviously, next week to do all of this same stuff yet again. Keep an eye on Astrobit Trading. Make sure that you're following @VenomAlgo for all of the updates and all of the awesome stuff and beta access, to the new Venom Algo that I just restripped and redone. More information on that if you are just joining in now. rewind to the beginning of the stream and you can get all the information on that. Super hyped for all that stuff, but I've got a lot of awesome stuff in the works for you guys. Really excited for all you guys to be here along this journey with me. And until next time, I hope that you guys all have a wonderful weekend. And until then, happy trading.